Well, joining us now to share his commentary on the day's market performance is Jason Horn from Steyn Capital Management. So Jason, good to chat to you. Welcome to Business Lunch. And of course, the big story this afternoon is the MPC and interest rates. What are you seeing?
Well, yes, Ray, thanks for having me. It seems that given what was released yesterday, CPI numbers in South Africa, it does appear that it's a foregone conclusion that we are going to get that 25 basis point rate cut. But I think it kind of talks more to the midterm budget policy statement and the ratification of the 3% target. And broadly speaking, we've seen market expectations around inflation longer term continue to drop. And given that the new target centered around 3%, plus minus 1% at 3.6% currently, it does seem that the central bank is able to take a look on South Africa's GDP growth, obviously being revised lower, and cut rates now, given that inflation is in check within that tolerance band, and kind of hopefully we do start to focus on GDP growth in South Africa, which fully justifies a rate cut today.
Yeah. All right. Some of the movers and shakers today, I've just mentioned Lewis. They've got more stores, but consumers are under pressure as well. Your thoughts on Lewis?
Correct. Look, it's a really good set of results, right? I mean, if we think about it, it is a properly impressive set with massive amounts of headwinds in the consumer space over the last few years. I mean, kind of think of where they were back in 2020 compared to now. They have been executing really, really well. And yes, to your point earlier, that really aggressive rollout of stores over the last 6 months, and intending to continue growth, albeit not at the same pace, a lot more sustainable, probably at 15 to 20 stores. But I think if you look at their outlook statement, still worries about the global market backdrop and some local political instability. But I think by and large, from the political front in the South African context, things have been fairly benign, and coupled with what is more than likely this rate cut we're going to get today, consumer outlook does look slightly better, albeit off a low base. But it's definitely a very decent set of results for Lewis.
Right, speaking of a good set of results, Mr. Price as well. All the retailers up today actually are looking at the board, but specifically Mr. Price.
Yeah, I think more broadly, the retailers up in sympathy kind of read across from the Mr. Price results. I think overall reads quite well. Look, they missed on the top line, but the market's taking heart from the improved margin performance, particularly on a relative basis. So they are executing really well, showing good discipline on the cost side, and it's like that of TFG, very cautious about H2, kind of citing the two-pot withdrawals in the base. But it is interesting to compare how TFG performed so poorly over the same period relative to Mr. Price. And look, I mean, it's clear the consumer has been weak, but I mean, we continue to see Mr. Price Management execute well, continue to gain market share, and that momentum is expected to improve as well. So they certainly are one of the best discretionary retail management teams in the country.
That is right. All right. Now, Investec. I'm flying through them at the moment. There's so much news today. Your thoughts on Investec?
Yeah, a bit boring, really, looking at what they released. Neither here nor there on it. But it does feel a little bit weak relative to the trajectory of the other South African banks. Overall, relatively in line, pretty well guided for set of results. And more interestingly, I guess, if we look at the update on the dividend, that's up 6.1% ahead of earnings per share growth. But when we combine that with their buyback program, it is a pretty impressive return to shareholders. So no fireworks in this set of results. But I think the market is kind of speaking to that, particularly when we consider how the other South African banks have performed with their results.
Yeah. Something I do want to chat to you about, Jason, is the so-called tech bubble. And it's so interesting with NVIDIA. They come out with these results and these forecasts as well, and they say it's just going to get bigger and bigger and bigger. Is it going to explode at some point?
That's a very good question. Look, I mean, if we just look at the numbers in isolation, it's quite ridiculous what we're seeing. So, I mean, revenue up 62% year on year, $57 billion in 3 months. But I think we're almost getting to this point of the law of diminishing returns, right? So we are seeing analysts adjust their forward outlook lower, obviously as that base gets bigger. But yeah, something to just think about is, I mean, the sales for the next quarter will be up more than tenfold where they were just 3 years ago, which is mind blowing.
Yeah.
And I mean, they're on course to deliver more annual net income than their two rivals, Intel and AMD as well. So
it's big.
The issue is, more broadly speaking, when we look at the sector itself and this growing concern around valuations with the AI cohort, and particularly around the circular nature of the financing on all these AI deals and the vast sums being
Jason,
spent on this.
We could actually do a whole show on this. We could do a whole show on this, and I think we really should.
Exactly. So, look, overall, I think the market is really grappling with that at the moment, and thinking about what the total addressable market for that AI infrastructure is, and at what point we're going to see increased revenues and bottom line. To be
so many questions with this. Right, quickly, your stock pick. I'd love to know.
My stock pick today is Georgia Capital. We remain really highly constructive on the company. They continue to execute really well and also remain really disciplined in their capital allocation. They've recently purchased in the last quarter 3.8% of the shares outstanding, and they're continuing that buyback program. And we particularly like their dual focus on growing the NAV through portfolio performance, as well as these consistent share repurchases. And as the CEO recently stated, their long-term goal is to reduce the number of shares outstanding to 1. So we can see this complete alignment of management and shareholder interests. And with stock still trading at 35% discount to NAV, every buyback that they continue with is meaningfully enhancing that value per share.
Interesting. Georgia Capital it is. Jason, thank you so much. Good to chat to you on Business Lunch. Really do appreciate you taking the time. Thank you. That was Jason Horn from Steyn Capital Management.